Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today, Friday, nothing day. Friday the 24th of July, we finished here. We are basically, guys, we're caught in the chop. This is a chop zone. Okay, very, very choppy. People are trying to pick directions. People are trying to go here and there, okay? Very difficult to do so, okay? We'll talk about how to play getting caught in the chop and how I look for trades during this like summer doldrum choppy period. But first, let's talk about the basics. The technicals here. We're in the chop zone, sideways. We're basically neutral. I mean, you could argue that, we're below the 50, right? So I don't know. Can you argue bullish? Yes, because we're consolidating at highs, but let's call it neutral since we're in the chop zone and we're in the summertime period. Okay. So the sentiment tells us pretty much the same thing. We're at fear. I love the fact that we're in a chop zone and we're fearful because the the bias is to the downside. People are positioned to the downside. We like that. Okay, we see fear everywhere. Extreme breadth fear, put call options fear. A lot of puts are being bought. So we know that despite these highs, we are at fear basically because of the war and Trump reigniting tensions with Iran. Okay, I suspect if that war is ended soon, we rip the highs. Okay, but even if there was no war and we had this kind of action, I would say that we're in a chop zone. We're in typical summer trading, and that's how you should view it. Okay, but I love the beautiful part here with the A. We saw the AAII investor sentiment yesterday. Get rid of Warren Buffett here. We saw that a lot of bears that came in the moment the market started tanking a little bit. Boom, a lot of bears came in. Bulls retreated, telling you clearly this is I like this indicator because it's very, very long term in nature. Okay, it's clear to see that there is no bullish sentiment. The bears are still out in force. Okay, so that's good. This is good for a bull. Okay, but yet we are still in the summer doldrums, caught in the chop zone. Okay, so what does this mean? Okay, let's go to the overall theme, and then I'll tell you guys how I would approach trading a chop zone type of trade. Okay, so first, of course, we're in the chop zone because of oil. Okay, oil is ripping because of the war, and today it went down a bit because the news was somewhere here in CNBC that here oil falls on report. Pakistan is pushing for new U.S. talks with China's backing. Okay, so we're back into the same game. Okay, same game. I was hoping it would get to the 100 because I was looking to short the $200, the 200 barrel, the $200 a barrel trade here. Okay, you can pick up like $2, $3, $4 shorting a call if it ever gets to that point in the $100 range. But maybe not. Okay, maybe we get peace over the weekend. Trump always talks his toughest the moment right before a deal gets made. Okay, so I don't know. If we do go down, it's a lower high. Okay, and every successive move will be lower. Lower high, lower low. That's what I suspect. But this is just, I'm bringing this up as a picture of why we're in the chop zone. Okay, you see oil there, and of course this counterpart is gold forming a bottom, trying to form a bottom. We're still not there yet. I still see some selling. It's summer trading. Boom, boom, boom. Selling is coming in, although there's some names that are strong. But, basically I see a consolidation before, going higher. Okay. And of course, the leading sector that is also helping in this drag is the semiconductors. Okay. The SMH, we thought this might be a bear trap, but the bears are coming back because we were more confident this would be a bear trap if we went above the 615 level, but we never did. We came close. So now we still have a downward momentum and we still have the head and shoulders pattern playing out. We could go lower. So this market will also be caught in a chop zone if the semis are weak. Okay, but it hasn't broken down yet. It could still chop around here before going higher. We don't know. But remember, this is an important sector. It must do well before the market does well, I'm assuming. Okay. So this is just a backdrop of why we're in a chop zone. We have the war, we have the semiconductors weak, and we have, of course, as an offshoot, the dollar. Dixie. It was a retest before going higher. We were hoping it would come back in, but no, it's a retest before going higher. Now, it depends. Does it continue to go higher before dropping? We don't know. Okay, this is all war dependent. This is not a technical pattern. Okay, this is all war, inflation related. Okay, So it's being painted by fundamentals, not by anything else. Okay, and this could easily go like a double top if we're back to peace. Okay, and it goes back down. So we don't know. Okay, I'm just painting the picture that you are looking at the SPY here, and all of that stuff that we talked about, the dollar, oil, the leading sector, it's all being reflected in this price, and we're still relatively close to highs. This is very, very bullish in my view. Okay, but we are caught in a zone. We are caught in a chop zone. So how would you trade this? Because you're getting killed up and down, up and down. You're getting killed if you're taking positions. Okay, so for example, how I would trade this. Okay, first of all, let's take Microsoft for an example. Okay, Microsoft. Down, these are the support and resistance zones. Okay, 344 is a big area, but we have earnings coming up next Wednesday. Okay, next Wednesday after market. Okay, so how would I approach this? Okay, first you would look at the VIX to see if it's fairly elevated. Well, it's normal. It's between 18 and 20. That's like a normal level for the VIX. If you go back, see, this is about an average level going back forever. Forget these spikes, but that's an average level. It can go lower from here and go higher. We don't know, but this is still elevated enough to be able to sell premium. Okay, so Microsoft. How would I approach this? I don't know if it's going up. It could still be in a chop zone. Okay, so what do? I'm waiting. I'm waiting till right before the earnings, and then we'll probably take a short trade. Okay, so what am I looking at? I'm looking at these zones right here, 344. Okay, I'm still waiting. But let's go to the Microsoft chain, and it's going to be short-term in nature. Okay, we know that the earnings are coming up next Wednesday, which is what, 27th? What was it exactly? Let's be precise. It's on Wednesday the 29th. Okay, so I'm going to do probably an option that expires on the 31st, to take advantage of the crushing in volatility once the news comes out. Okay, so what I'm going to look for is an option here. I'm not doing it now, but assume this is like Wednesday, the same day, maybe around 3 o'clock. We want to wait till the very, very end to sell premium, because the volatility will increase. Okay, this implied volatility this column right here is 69.70. If you're looking at the July 31st expiry, okay, we're looking at the implied volatility will probably increase as we go into Wednesday. So we want to take advantage of that. If you're selling options, an increase in volatility is not good for you. Like if you sell an option and volatility goes up, you're going to probably lose money. Okay, what you want to do is wait and sell it at the highest possible point. Okay, and that is right before the earnings. Okay, there are two ways to play it. If you really want to take advantage of the earnings, we wait till Wednesday. Hopefully it goes down by then. Okay, it goes down towards this 344 level, so we can sell a put lower, maybe the 310. We can get a good price. And how out of the money do we go? Well, I like to sell about 15 to 20 delta. So let's say this is the day, and we are on Wednesday. The price is 381, and the volatility is 68. There's all assumptions. Okay, I will probably go down to here. Maybe sell the 340, 10, 15. Let's say 340 to 350-ish range, somewhere around here, depending on how it operates. Okay, and it'll be we don't know what the price is, but if this is the case, this is what I would do. That's what I'm looking for, between 10 and 20. 10 is a little bit too low, like 15 and 20 delta, because I don't mind getting assigned. And you have to go small. Okay, you have to go small. Maybe do one contract if your account isn't that big, because one contract is $35,000. Okay, I might do like 3 to 5. I don't know. So you want to be able to go small so it doesn't really affect you. Okay, so no one trade wipes you out, is what I'm trying to say. So that's one way of playing it. Okay, the other way of playing it is literally being scared of earnings, because every earnings report right now has been losing. It's like they announce good earnings and the stock goes down. Okay, so you have to be aware of that. We're in the summertime, and we don't know if you sell a put. We could sell a strangle, which is sell a put and sell a call. We don't know yet. Okay, that's also very good. I would do that as well for Microsoft. That would be a good trade to sell, like 15 delta, 16 delta strangle on it. Another good trade. What you want to do is you want to short premium in these cases, because you don't know the direction. Okay, and you want to take advantage of that. So You can wait till after. Let's say it opens lower and it ends at 344. Then you could short a put for like, 2 weeks, 3 weeks, 4 weeks out. Okay, not long term. This is very, very short term in nature. Or you can even do the strangle after. So it depends. Okay, you won't. If you wait till after, you got to go a little bit longer, out of the money, because you don't want the volatility crush to affect you that much after earnings. Okay, so if you wait till the 30th and you want to enter, pick like about a month later or 3 weeks later. Okay, but if you're going to do it right before earnings, pick the option that expires on that Friday, like 2-3 days. Okay, you want to take advantage of that crush in volatility, because you can lose and still make money, because they'll be heavily overpriced. Okay, that's what you want to do. So you have options here. You want to wait before, you wait right before. And you want to play before earnings, you wait that day, like 3 o'clock or 3:30 on that Thursday, no, on that Wednesday, because it's at after market. So you wait till like Wednesday, the 29th at 3 o'clock, and then you put in your short put or your short strangle, short put, short call. If you wait till after, wait till the reaction, see where it settles, and then pick an option that expires maybe in 2 to 4 weeks afterwards, and then you can be more sure, but you might not get as much of a premium, but you might get closer to these zones, which are support. This is a good zone to play it. Okay, so that's how I would play it. I would try to look for short trades, short options trades, and not trying to pick direction in these choppy markets. Okay, so you can still be wrong and make money. Okay, be very selective and don't go heavy. Be very, very within your limits, okay, depending on your account size. And if you have a smaller account, well, then you don't have to like sell puts. You can do a put spread. You can sell a put spread, okay, and sell a call spread, which instead of doing a strangle, you can do an iron condor, is what they call it. Okay, so that's getting very, very technical at this point. Maybe I'm throwing too much at you, but the point I'm trying to say is how to approach this market, how to trade it, is to make sure, that you're selling premium, you're going short, and you're not really taking a direction in these choppy markets. Okay, so let's finish this off by talking about the one trade that expired today that I'm going to be out of, and that's Intel. Okay, Intel, it finished at 92. We sold the 100 put. We're going to get assigned. Okay, we were short at $88. Okay, it ripped in our faces. We were very, very wrong. Again, we didn't panic because we didn't go heavy. The first sign of good risk management is not to go heavy when you enter this strangle. Okay, so this is what happened overall. Okay, I got short at 88 on the call, so I'm short at 88, but I collected 1389 in credits to be precise. Okay, I thought it was 1350, but it turned out to be 1389. So with 1389 in credits, it's like I shorted the stock. If you add 1389 to 88, it's like I shorted the stock at 101.89. And I'm going to get called out. I'm going to get assigned at 100. So that means I shorted at 100, bought back because I short the put, bought back at 100. So I made the difference. The total profit per share is 189. Okay, this is a trade that finished profitable after being very, very devastatingly out of the money and taking a hit. Okay, but again, what saves one is the fact that you are doing preemptive risk management by not going super heavy on your trades and just making a lot of them. Okay, and when you have the worst case scenario, it doesn't really destroy you. Okay, so that's it. The recap on Intel, we're out at 189 per share. So that's great. I'm happy for it. A terrible trade turned out to be a winner. Okay, so that's it. So all we have left is Bloom Energy, and today went bad, and we'll talk about that coming up next week because this video is getting long, and how I'm going to play Bloom Energy. Okay, because it too has earnings coming up on Tuesday the 28th. Okay, so how will I play it? Because I took a half a position. Okay, all right, guys. So that's it. SPY caught in a chop zone. You're going to get destroyed if you're trying to pick direction. I like playing the short option strategy where you could still be wrong and still make money in these choppy markets, but you have to be selective. Pick them at the right spots, and pick them when the implied volatility is very, very high if you're gonna short. Okay, so that's the strategy that I like going forward. I'm going to take a little bit of you don't really want to go long directionally. You really want to try to be short. There are other strategies to do, but for now, that's the theory. When you're in a choppy market and it's directionless, you want to be directionless as well. But by being directionless, you want to get paid for taking that non-directional trade. All right? So that's it, guys. That's the end of the 24th of July. Let's see what happens on Friday. Friday of next week is the end of the month. We're probably going to be bid until then. Money flows coming in, but still in a choppy market. Okay, it all depends on the war and what Trump says and does. Okay, all right, guys, later.